Hello friends, today's topic is deductions not allowable as per section 58 of the Income Tax Act 1961, which is part of the topic income from other sources. Herein you will see the headers which has been discussed under section 58 have been borrowed from deductions applicable in the case of profit and gains from business or profession. Meaning, if for expenditure incurred TDS is not deducted by the SSC, then in the case of resident SSC, the disallowance is to the extent of 30%. In the case of non-resident, the disallowance of expenditure is to the extent of 100%. Also, 40A2, wherein expenditure, if unreasonable, will be disallowed in the hands of SSC to the extent of unreasonability or to the extent of excessive expenditure, or 40A3, wherein any expenditure incurred other than prescribed modes and is excessive of 10,000, then it will be disallowed. So the provisions that we have discussed in profit and gains from business or profession, we will be discussing in section 58 also. So friends, section 58, deductions not allowable while computing the income from other sources. In this case, if the expenditure is personal in nature, then expenditure won't be allowed as per section 58. If TDS is not deducted on any payment made outside India, it is not allowed. The expenditure won't be allowed as deduction. 100% disallowance of expenditure would be there. Any payment of salary outside India or to a non-resident without deduction of tax at source, then it will be disallowed. Any payment to a resident wherein taxes have not been deducted, then 30% disallowance will be applicable to the SSC. If payment is excessive and payment has been made to a relative of the SSC, anything to the extent of excessive or unreasonable expenditure will be disallowed in the hands of the SSC, which will be similar to section 40A2, 40A3, expenditure in cash or any other mode which is not prescribed as per 40A3. If you are making a payment in a day in excessive of 10,000, then expenditure won't be allowed as deduction under section 58 subsection 2, which is a provision which is similar to 40A3. Correct? So let's read out from this section and then we will move on to the next slide. Deductions not allowable as per section 58, which is part of the topic income from other sources, and the last topic under the head income from other sources. In respect of the following items of expenses, in the case of any SSC, any personal expense of the SSC won't be allowed as deduction as per subclause 1 clause A of subsection 1 of section 58. So personal expenses not allowed, and this is applicable in case of any SSC, all the SSCs. Any interest chargeable to tax under the Act which is payable outside India on which tax has not been paid or deducted at source. So interest payable outside India, taxes are not deducted and paid at source, will be disallowed as per 58(1)(a)(2). So it is specifically related to interest which is taxable in India and it is paid outside India without deduction of tax at source. Any payment taxable in India as salaries if it is payable outside India unless tax has been paid thereon or deducted at source as per 58(1)(a)(3). So salaries payable outside India without deduction of tax at source will be disallowed under section 58. So subclause 1, 2 and 3 states about personal expense, interest expenditure outside India, salaries payable outside India respectively. Second clause, payment is made to a related person or made in cash in excess of 10,000. Section 40(a)(2) and 48.3. Similar provisions will be made applicable in section 58 as well. Whatever has been written in 48.2 and 48.3 will apply under subclause under subsection 2 of section 58 for the purpose of disallowing any expenditure which is related to income which has been taxed under the head income from other sources. And 48 to 48.3 you are already aware of what is the meaning of the section, what does the provisions of 48.2 and 48.3 states. Disallowance of 30% expenditure in case of 40A 1A, which is nothing but disallowance of expenditure where expenditure is paid to a resident and TDS, applicable TDS, has not been deducted and paid to the government authorities. In such a scenario, in the case of 40A1A, the expenditure was disallowed to the extent of 30%. 70% was allowed and 30% will be allowed at a later point of time when taxes are deducted and paid to the government of India before filing of return of income. Correct? And this has been borrowed in section 58(1)(a). No deduction in respect of expenditure incurred in connection with casual income. Subsection 4 of section 58. So, subsection 4, section 58, we have studied that in the definition of casual income while studying subsection 2 of section 56, we came across the word casual income, which is related to winnings from lottery, card game, puzzles, horse races, correct? And we also studied that no deduction or expenditure will be allowed to the SSC against such income, against such casual income. Accordingly, that was coming from subsection 4 of section 58. Also, such a prohibition is not applicable. I mean, deduction of expenditure is not applicable to an activity which is owning and maintaining horse races. Owning and maintaining horse, in such a case, if any deduction is incurred, then subsection 4 of section 58 won't be applicable, meaning there will be no disallowance of expenditure in the case if the business of the SSC is owning and maintaining horse races. Also, even if there is no income, even if there is no stake money income from horse races, then also such an expenditure, if incurred, will be allowed. We have a background of case law of CIT versus Rajendra Prasad Moody as held by Apex Court, wherein if income would have been taxed in the hands of the SSC, then expenditure should also be allowed to the SSC. It's only that in the current year there is no income. It doesn't mean that expenditure will be disallowed to the SSC under section 58. So expenditure will continue to be applied even if there is no income, and also for casual income where there is a general provision saying that no deduction is allowed, no deduction or allowance of expenditure is allowed, that is not applicable for owning and maintaining of horse races. And if there is any loss, meaning if there is no earnest take money income which is nil during the previous year, however, let's say for example there is an expenditure of 100 rupees, so there is a loss from business of owning and maintaining of horse races during the previous year 1920 of 100. This 100 rupees loss can be carried forward to the next financial year as per section 74A. However, it will be allowed to be set off only against income from owning and maintaining of horse races. This is coming from section 74A on your screen. The prohibition will not, however, apply in respect of the income of the SSC being the owner of race horses from the activity of owning and maintaining such horses. So not applicable to owning and maintaining of horse races. In respect of the activity of owning and maintaining race horses, expenses incurred shall be allowed even if the business, even in the absence of stake money earned. So even in the absence of stake money earned, Expenses will be allowed to the SSC, and in such a scenario, if there is a loss, it shall be allowed to be carried forward in accordance with the provisions of Section 74A. So friends, Section 58 in a nutshell, the provisions are more or less borrowed from the profit and gains from business or profession, be it a personal expenditure, be it expenditure not allowed if TDS is not deducted, be it 40A2, 40A3, correct? And at the end, no deduction will be allowed in the cases of casual income if the same has been incurred for earning the casual income. Only the exception being owning and maintaining of horse races. So friends, this concludes section 58, which is related to deductions not allowable. And with this friends, we conclude the topic of income from other sources. The only categories left are illustrations and case laws. Thank you.